So the sum of amount, uh, the sum of all amounts transfers from work in process to finished goods represents the cost of good manufactured for the period. As a job is completed, its cost are transferred from work in progress to finished goods inventory. So here, direct material, labor, and manufacturing overhead. This is the cost of the product that is transferred to finished goods. And then we transfer the completed units. It means work in progress will decrease and finished goods will be increased. We also already have this concept discussed in our book example of 314. So we create the entry finished goods to work in progress. So here, and this, when goods is finished, and then the finished goods cost will be transferred to cost of goods sold account. So the cost of that job is transferred from finished good inventory to cost of goods sold. So recall that cost of goods sold is an income statement account if only a portion of the units associated with a particular job are shipped. Then the unit cost figure from the job cost sheet is used to determine the amount of the journal entry. For example, the cost is basically you manufactured the cost worth of 480,000 of worth of goods and you sold worth of 450,000. So 450,000 amount of goods are transferred to cost of goods sold income statement account, and rest of the 30,000 will go to finished goods on the balance sheet as inventory. So this slide presents the transferring of units sold. So when finished goods are sold, two entries are required. One is to record the sales and one is to record the cost of goods sold. When we are going to record the sales, the standard entry is accounts payable to sales, and when we are recording the cost of goods sold, the entry would be we increase the cost and we decrease the finished goods, and this will go to, this is income statement item, and this is the balance sheet item. So I have here the class exercise. This is a question from your book 16 exercise, and it is on the page 1 to 5. So I'm gonna give you 20 minutes to solve this question, and the answer of this exercise I'm gonna upload to our WeChat group and Blackboard. So you are required to solve this as a part of our class exercise and try to match the answers to the upload in the group. Okay, so let's move further. So we are starting our learning objective 8, which states compute underapplied and overapplied overhead cost and prepare journal entry to close the balance in the manufacturing overhead to appropriate accounts. So let's explore this LOS. So here, when we apply overhead on the basis of predetermining overhead rate, it is likely that the amount of overhead applied will be different from the amount of overhead actually incurred during the period. So that's what we discussed in our previous slides, that we're going to discuss this concept later on slides, in which if we estimated that larger than the, sorry, I need to write it actual. So it means there is a problem, because applied overhead directly goes to the work in process, and that cost will go to the cost of goods sold, and from there we can find out our profit or loss. If we charge more cost to our finished goods, it means our profit will be decreased, right? But if the actual is lower and we applied it, we estimated higher MOH, manufacturing overhead, and our actual is lower, it means we erroneously decreased our profit and increased our cost of goods sold, right? Because we charge more cost to the goods, and hence we are ended up having less profit. So this, and the vice versa as well, if we applied less, our actual is higher, it will give us higher profit, and that profit figure will be erroneous. So in that case, there's a mismatch. So the difference between the overhead cost applied to the work in progress and the actual overhead cost of the period is referred to as either under applied or either over applied. So let's explore this. Under applied overhead exists when the amount of the overhead applied to job during the period using the predetermined overhead rate is less than the total amount of overhead actually incurred during the period. Which means if predetermined overhead rate, or you can say that if the applied MOH is less than actual, it means we are having the issue of under applied overhead rate, right? And now exploring this overhead, over applied overhead. In that case, over applied overhead exists when the amount of overhead applied to job during the period using predetermined overhead rate is greater than the total amount of overhead actually incurred during the period. Which means if over applied or estimated is greater than the actual one, then we are facing the issue of over applied. So let's explore this concept further, how we're going to deal with that one. So example include